Hi, I'm David O'Connor, and welcome to the Canadian Real Estate Revolution podcast. I have a great interview for you today. I had the privilege of interviewing the brilliant Michael Tam. Michael is an extremely successful venture capitalist. Just a little bit about Michael. He started a hardware company in the late 80s while he was in college. He was able to scale and grow that business. Then he pivoted over to a software company that was extremely successful. They even developed software and games for Nintendo. And then he even had an internet security company that they were able to grow and scale. And they eventually actually sold that to McPhee. And then Michael could have basically retired before he was 30 years old. But, he had that entrepreneurial spirit. So he just continued to be a venture capitalist with many, many, many successful ventures. With the latest one, he is one of the co-founders of KIC Realty. And he is also the director of EVP Investment Relations for KIC Realty. This is a doozy. You got to check it out. Hey, everyone, and welcome to the Canadian Real Estate Revolution podcast. I'm super excited for my guest today, and Mr. Michael Tam. Thanks for being here, Michael.
Thanks for inviting me.
I thought maybe the best place to start is just, if you don't mind, talking a little bit about your background, kind of where you got started, kind of leading to where you are now, but maybe some of the milestone events that kind of happened over that time.
Sure. Well, I'm a serial entrepreneur. And I have a particular passion for startup ventures. And I've been at it pretty much since high school with my first little venture with my current business partner, who we've been working together with and friends with since the high school. I think the entrepreneurial bug was really planted during our university days. My partner and I, his name's Arthur Wong, and we started a computer hardware business together while we're going through school. And, we did pretty good hustling, moving, delivering computer hardware back in this was the late 1980s when computers were just coming into the mainstream. And we continued that for, I think, about 4 years, 2 years before we graduated, 2 or 3 years before we graduated, and then kind of 1 year in. When we graduated, we both landed jobs. We lived in Calgary, and we both landed jobs in the oil patch.
Right.
And we had some pretty good jobs, but boy, we could not stop selling computers. So we're moonlighting, and to the credit of our ex-bosses, they let us moonlight while we're working. And 2 years into our job, we finally said, you know what, we're not sleeping at all. Things are going good. Not great, good. We're reinvesting every single dollar we had back into the business, buying more inventory from Taiwan at that time. And, that we just decided we're going to quit our jobs. We're going to go full blown into being, business owners. And we did. And we've never looked back. We haven't looked back since. We've been going from collectively one venture to another, having lots of fun along the way. We were fortunate in terms of, riding the tech boom. We saw great things in tech. At that time, no one even, we just started with the internet. Nobody knew what a computer was. I remember teaching old ladies. I had a computer course back then. I was trying to teach old ladies how to use Microsoft, and to no avail. But the plus side of that was knowing that that's the future, because nobody knew anything about software. So anyway, we transitioned. We grew our computer business from a storefront in a strip mall to a warehouse where we were able to get into wholesale, selling even more computers, and transitioned from hardware into software, where we thought that was the even better market. And, both of us were not programmers, we're more business people, but, the opportunity was staring at us in the face. Our first venture was video gaming. We're pretty hardcore gamers, and the natural extension was to make a game.
Right.
And lo and behold, we found a couple of talented individuals. One programmer in particular, who's my current third or second business partner, that plucked them out of, convinced them to not go into school, high school, convinced them to join the evolution, and he made a game that we sold to Nintendo back in
Oh,
1994, and that was a huge milestone for just the three of us, Calgary boys,
right.
and really locked down the need to stay in the software. So we did pretty well in the video gaming business, but I think the small business side of us, the business side, convinced us that convinced us to be paranoid all the time. So we're always worried about competition and what's next. We spent a lot of time thinking about the future. And because of that, we decided our strategy was going to be a divide and conquer strategy. So Arthur, my business partner, would go, instead of both of us running one company together, we decided to run as many companies together as possible. So we seeded a internet security company at the time as well, and he ran that while I ran the video game company, and he did phenomenally well on the security side. By the time I was 30, we were pretty much ready to retire.
Oh,
we
awesome.
yeah, we had an exit. We learned all about corporate M&A as a seller, and Arthur went and joined the company that bought us. It was a company called McAfee. It bought our small Canadian company, and I remember I was like 20, I was almost 30 at the time, and I thought, you know, my goal in life when I was like 10 was to be financially independent. And how I defined that was I could eat wherever I want and not worry about the bill.
Right.
That was as simple as that. And at 30 we accomplished it, and it was like, wow, now what? And pretty much entered. I actually retired for about a year and a half.
Nice. Well done.
Traveled a lot, and then got restless. 30 is way too young for anyone to retire, by the way.
Yeah.
So got back into the business. I found that I was definitely passionate about startups, and got right back into looking for investments where I could play an active role on the business side. So that was kind of like the catalyst for getting back into business, and also really where I started to find what I was starting to get better at, but also what I really like doing. So yeah, and for the better part of the next 15, 16 years, I was seeding startups, being a director, being on the executive side, but always part of a team. So was able to develop kind of the formula to success, what startups needed to beat the odds and get to a point where founders, employees, and the associated network of investors that put their trust in us were able to get a nice reward and create an exit. So fine tune that process over the course of the time period from when I was 30 to basically when I retired again at 45. 45 was about 2016. I decided, you know what, I was at the age where it's really difficult to actually not work 24/7 in a startup. And I thought, okay, I think I'm running out of energy. So I'd rather transition again and work behind the scenes. So I got into mentoring executives of startups. I spent, I think, 3 years. I connected with the government in Calgary, the innovation arm over at U of C, and I became an executive mentor. I was consulting with them, looking at all their startup companies and seeing how I could help the executive team get products to market and so on and so forth. Great experience. Really enjoyed it. I love beating up executives. It was, and and there was a couple of investments that I was able to make with those companies because they look like they're going to go and have the energy to go and change the world for the better. A couple of years in the meantime, the link to Kick comes along because my nephew is in the real estate business, and he told me about the company that he was involved with, which was EXP, and how they were innovative with profit sharing, and it's like, and I paid attention for it for a number of years. So between literally 2018, I think he joined in 2019, somewhere around there to now, I had a chance to kind of witness, how an agent was going through the ups and downs of participation in a kind of revolutionary company like that introduced this cool model, which is actually quite similar to software companies. I was a fan of how I thought the real estate industry was kind of transitioning towards more of this appreciation of its labor force. In 2023, my nephew again was saying, there's this thing coming this new potential company happening. You want to come and talk to the founders and see what they're about. And I think he pretty much harassed me for about 4 or 5 months because I was thinking, well, what do I know about real estate? I'm a software guy. And I did end up chatting with the rest of the founders, and we came up with a great idea to get me involved. I mean, my area is corporate finance, raising money, finding ways to generate and leverage business success into equity success.
Yeah.
And that's what was the challenge that was put forth by the founders. It's like, you know what, Michael, we're strong in operations. We don't know much about the equity side. We've experienced it. We've experienced the reward of the equity side. How do we create a business model that takes the good stuff, takes as many of the good stuff out of into a equity based compensation model, and also create a kind of like a longer term strategy to help agents, and also provide something that's a supplemental revenue stream for them for later years. And I thought, geez, that's okay. Well, I don't know the industry at all, but this challenge and opportunity sounds right up my alley. So I took the bait, and here I am. And the founders are great. They pretty much let me quarterback the structure of ensuring that those shares that we offer people are actually worth something, and that at the end of the day we're able to kind of again take operational success and mirror it with equitable gains,
Right.
and make everyone better off for joining us in this run.
And no, one of the things that jumped out at me when I first saw the model, and if you remember, I abruptly moved to Kick after I saw the model, but we set up a meeting
Yeah.
on really short notice over the Christmas holidays. You were gracious enough to jump on, Willie, Michelle, and Ron, the other founders. And the part that really jumped out at me is when you did a breakdown of the stock structure that I thought was one of the brilliant strokes of KIC Realty. If you don't mind, if you could explain that a little bit.
Yeah, okay. I won't. I'll try not to go too deep into the details. Maybe we could say that for the next interview. But generally speaking, like I was thinking, okay, well, if we're here to create a long-term supplemental annuity, like almost an annuity for the agents, how are we going to make it work? Well, first of all, we're going to try really hard to make the company profitable. Keep our expenses tight. We want a model where we're expecting to have the company make profit, which I think it's challenging but definitely doable. I mean, a small business, it's tough to make money. I mean, there's a lot of costs and things like that. And then the goal is to use that. And then what we did was we designed a a model that took that profit and divvied it up in a sustainable and growing fashion for investors, which is our agents.
Yep.
We we've seen we've seen what happens to folks that get in at an earlier stage and how powerful that is. But at the same time, we've all seen how mispricing of stock affects people's financial well-being on the upside and on the downside. But because we're private, we're able to kind of use a financial formula in order to derive a return for any investor year in and year out, regardless of when they come in to the equation. So that, if you didn't join us in year one, you can join us in year two and you'll do just as well. So we structured it in so I borrowed the model from real estate investment trusts. These were prominent models that rewarded investors back in the 1990s, 2000s, and basically the executives that run those companies take the profit that they take from that they make from the company, and they make sure that the majority of the profits are divvied up to the investors, because they were able to develop a sustainable stream that doesn't require a whole lot of reinvestment. So I think that our business is similar. Like, we do not need to reinvest a whole heck of a lot of money, like a large percentage. Obviously, we reinvest it in terms of training, marketing, that type of thing. But it's not like it. But at the same time, we're able to generate a profit from the business. So we use that profit and go, okay, every year we're going to give it right back to you guys, and we're going to do it when we developed a number which is in that 8 to 10% range for the dividend return. And when you wrap up these core goals and around a model where we're able to keep their costs managed, everything will work, and it should work every year. And we set it up in a way that the founders aren't going to be the largest shareholders over time either. We want our agents to continue to invest and become hopefully larger shareholders in the company, so that they can get larger dividends over the course of their tenure with the company.
Yeah.
So again, as sustainable as possible. So it's not like, oh, it happens this year, but it doesn't happen next year.
And for those that happen to be watching, your legacy models, like the old brokerage models, you basically get compensated one way, and it's through commissions.
Yes.
There's a couple of brokerages that started rolling out the stocks and the stock awards and given agents ownership through a couple of different methods. One being stock awards, and the other is being able to, purchase stocks with a small percentage of your commissions as well.
Mm-hmm.
So you're a little bit, not only are you getting another revenue stream potentially, but you're getting ownership in a company, where most realtors, they only get commissions. So as soon as they get off that production treadmill, the income stops.
Right. And we've seen it. We've seen other success. I studied a lot of the real estate, the larger ones, before entering into this, and I've noticed that it seems like the founders of a lot of these ones do really, really well. They get some really, really big checks in dividends, but then it drops a lot. If you're not a founder and but you're even with the company for a lot of years, I mean, the difference in terms of dividends and shares and ownership is it's just night and day. So what we're trying to do is we're trying to flatten that as much as possible, so that we'll do well, and we want others to do very well too. And we're creating different streams of reward for the hard work that's the agents are doing to help make the brokerage profitable.
Yeah, and we love that. But I also thought another brilliant, there's a few big strokes when I saw the model. And if we just pivot over quickly to the revenue share side of things, obviously the company I was with was EXP, and they commit 50% of the revenue share So
Right.
remember, revenue shares from the top. It's not profits at the end. Back
Hmm.
to agents, which sounds great. And when I was there, I was like, I wasn't getting anything anywhere else. So this was new. But I feel like one of the problems they did and some of the other companies like Real is they've almost overextended themselves in their rev share model. They have all these tiers and the amount of revenue share, like this 50%. What happens when a lot of the tiers are open and a lot of that revenue share is being eaten up, and they just set themselves up for what's happening now is massive revenue shortfalls. And what I loved about the kick model was there's less of the rev share, but it's spread so evenly. So the average agent is going to make a lot more in rev share. So you're going to see a lot of people do well. Maybe you'll have less multimillionaires, but the revenue share is spread well, and they're set up for the future, as in they're not going to run into these big issues that these other companies run into with these revenue shortfalls.
Good. Like, I'm glad you saw it because, that was by design.
Yeah,
Like with the rev share. I mean, the one thing we're trying to avoid is, we want real estate agents who sell houses and homes to join us. We
yeah,
don't want recruiters. And, if you like, our primary business is real estate brokerage, and we want everyone to remember that as they're spreading the message for the company.
yeah,
There's certainly a benefit to for on a rev share side to supplement income, but we want everyone to be again, remember that the real estate agents first, and the rev share will be rewarding, but it's hopefully going to be secondary to the primary business. And we've seen that in other models, other companies that kind of got a little crazy. You're seeing it in social media. Some of these folks that work for these brokerages, I didn't even realize they sell houses.
well,
So I mean, they're
well
trying
that
hard.
I feel like those other models, and without getting too in the weeds, but there's multiple tiers. So some of them are 7 tiers, but the
Yeah,
most lucrative is tier 7. And
yeah.
I'll just be in the XP, for example. There's probably, I don't know, last I heard it was maybe 30 people. I know they made it easier to open up 7, so maybe 50, 60 people out of 87,000 that will open that
Hmm.
up, and maybe 1 or 2% of the company ever open up tier 2. So it's literally built by design to bring in these big recruiters that are really talented at what they do, and
Sure.
they bring people in, and they're taking advantage of an opportunity, and they're making a lot of money. But when you have something like what they're bragging, which is a good brag, about having 230 million in rev share they handed out in 2023.
Yeah, that's
Yeah,
right.
that's phenomenal. Who else is doing that? But when you do a deeper dive, at least 200 or more is going to 40, 50
Handful.
people,
Right.
right? And then the average agent, the vast majority, the 99.85, right,
Yeah.
aren't benefiting, but the company is growing. But with Kick, which I just thought was brilliant, and it was very Canadian, by the way, is there's 5 tiers, but they're all open. And for people who don't know these other models, you need to have so many in your front line to open up the next level, then so many at the next level. That's why very few people ever open up 2 or 3 levels, never mind 7. But at Kick, all 5 are open. And even though revenue share is in the background because you should be focused on trading real estate, and that's another great thing I feel about the Kick model is how they're helping agents with the technology and the support and all of that. But if you do happen to bring somebody in, the compensation on a rev share, even though there's less levels, it's spread evenly. And that's why I thought, man, you're gonna have a lot of thousands of people potentially doing really well as opposed to a handful of millionaires. And that's what I thought. This is definitely Canadian.
Yes. And again, I'm glad you're seeing it because that is, again, by design. We're trying to, have as many of our agents share the wealth as possible, as opposed to having it aggregate to a handful of people, which, which I don't think works in the long run. There will be problems, and I think if we can get the majority of our folks happy, and it's again it's a move towards a more sustainable model
Yeah.
without a lot of, and it averages out the highs and lows, right, so that people can,
Yeah.
again, focus on the business and not focus on the supplemental stuff.
So, and as you talk about sustainability, kind of takes me to the last thing I wanted to talk about, which is all this thought has gone into the KIC model with a real focus on sustainability. Let's look into the future a little bit, into
Yeah,
your crystal ball. And
sure.
where do you see the future of this company, and what is, I guess, also the vision of the company moving
Yeah.
forward?
I will touch on that, but before I forget, I do want to put one more point on the rev share. I mean,
Yeah,
we made a commitment to take to divvy out all of our rev share funds. Like we've allocated 30% of the agent's contribution to the brokerage to rev share. So if there's anything left over, it is going to the dividend to investors
yeah,
slash agents. So at the end of the day, everything that we collected will be going back out to everybody that's within our organization. So,
yeah,
we want to emphasize that as well as a plus. It's also transparent. It's easy. Like whatever we collect, it's going back out at the end of each year.
yeah.
Simple, really
Yeah.
simple.
I heard it explained so simple that it's literally an account. Everything goes right from the top, goes right
Yeah,
into the rev share account. Where again, at EXP, Canada's currently at a 27% deficit on the rev share. But what I didn't like about it was I felt like I wasn't transparent. I had to do the math when I saw the rev share come in. Again, initially, I'm happy. I'm making rev share. That's great. But then they advertise one thing. How come I didn't hear about it? And on the inverse of that is KIC is fully committed, and the reason they can do that is they haven't overcommitted themselves in rev share as well, which I thought was a smart move when you talk about sustainability. Before we go into the future, something
yes,
another thing I really liked is when you talk about transparency, is in the presentations you see there's a whole rationale to how they came out with the stock value, which is currently, as we're having this conversation, is at 15 cents.
right.
But when you talked about the transparency, and even, let's be honest, it seems like conservative to some degree. So what's some of the, like, I know it's in the deck, but what's a really short version of how you kind of came up with that number?
Well, we forecast that we're going to bring in about 2 million and change for the brokerage in 2024.
Year one.
And from that, we're going to make. We're hoping that we can net profit about 230,000, 200,000, say. Okay, and based on the amount of shareholders that's out there, we think that we can, when we return all of the money from all the profit back to shareholders, they're going to get somewhere between 8 to 10%, and then you reverse that to get 15 cents a share.
Right.
So when you
Gotcha.
buy it at 15 cents, you're going to get somewhere around 8 to 10% return, assuming that we can hit our financial numbers, give or take. Right? We think it's all within a range. We set up a range to give us some leeway. Obviously, you can't fine tune it right to a percentage point for forecast, but within the range, again, we target 8 to 10% return for the shareholders, and that's your value. So there's a basis for it. Like
Right.
we're not going, okay, well, it's worth $1, and someone to go, why? And it's like, trust me,
Yeah.
there's math, and we'll follow the same math every year,
Yeah.
and
Oh,
that also helps, for as we move into the vision part, right? Every year, people will be buying stock and so forth, and we might be open to non-agent investors investing in the company as a growth to get additional working capital, right? So
right.
because we've fine-tuned and made transparent and also made analytical our share value, agents and investors can all look at this. Even if they don't invest, they can look at it and go, okay, yeah, this is good value. This is fair value. And
Right.
I think that's really important because, then it gives a lot of reassurance to everybody that's involved with the company.
Yeah. And again, we keep saying it, but very Canadian, and I'm all about the transparency. Is, I think, one of the big standout things
Good.
about the company. Yeah.
Good.
Just a timestamp us when we're having this conversation. The company's only been around for a little over 5 months. We're already in 3 provinces, uh, around 100 agents, probably more with LOIs in place,
Yeah.
and that kind of growth. And we're talking about the beginning. We're at the beginning right now.
Hmm.
But that's what makes me, again, feel really excited. Well, not only the people we have in place that are driving this thing and steering the ship. It's just what we've been talking about, the transparency and the thought that's gone into the sustainability, which is a huge piece that I feel like people just don't pay attention to.
Yeah. I mean, it's like, I like working in the background, like, and I'm quite proud of where the company is at right now. I mean,
Sorry to put you on the podcast.
oh,
You can go back to the background after this podcast.
yeah, I like working background. I like walk. I mean, there's so much energy amongst all the people in the company right now. I mean, it's great to see, and I get to talk to them and just see how they believe in the model that's being created, and how they're very eager to share it with other people, other agents in their community. And I think it's just going to sell very well on its own. Certainly, even more with the word getting spread around amongst peers. Like, as far as the company growing, I mean, when we set this up, we had I think it was a very, looking back now, I think it's a pretty fair and conservative target to double the staff or double the agent count on an annual basis.
Right.
And that gives us a really long runway for years and years to come. I mean, there's
Absolutely.
180,000 agents in Canada. I mean, at the end of 7 years, our number was somewhere around 3,000 and change, 3 to 4,000, somewhere around there. I mean, that's like, I think it was like 2% of the market at that time, and that's after 7 years. I think if we just do that, I would say we were successful. I think we've got way more runway and a lot more acceleration than what was initially planned. Just now that we're 5 months in and we're able to see the reception that we're getting.
Especially, I think the magic number, if I believe, and correct me if I'm wrong, is 186 agents.
Yeah,
And
that's
then
right.
we're on pace to do well over 200, if not 220, 230. But it seems to be
Yeah,
accelerating. I wouldn't be surprised if it comes in a lot.
exactly. And we also set up our forecast so that we're not going, "Hey, Dave, can't you bring in more people?" Like, come on.
Yeah.
We don't want to do that. And we think the way we have this set up, there's not going to be all this unnecessary pressure on anybody to do what they normally would do. Like,
Yeah.
if they wanna share with, they've got a big network and they wanna share the story and they want to call us in to help them share the story, we're more than happy to. But, we're not gonna go and press anyone to recruit and grow. I
Yeah.
think
What
this
people
one of
forget is that your legacy brokerages, they all have on staff managers that do recruiting. They do recruiting like all the time. And
Sure.
what's I love about this, and I'm authentic when I say it, is and thank you and the founders for creating something like this, because this opportunity is so phenomenal that I literally want to tell anyone I care about in real estate about it. I don't consider myself a recruiter type, but I feel like I'd be doing someone a disservice if they didn't realize this was out there. So I believe that's the big difference. Like, you've created something that, again, as I said, I believe is the best opportunity that's ever existed for Canadian agents.
Wow, thanks. That's
Yeah.
that's quite a
he
lot to
didn't
say.
he
And
didn't
spending,
send me any money for that.
I love hearing about this, because we're here to support you. I mean, this is, I love coaching entrepreneurs, and I think real estate agents in particular are kind of entrepreneurs on their own. They've got their brand. I mean, I looked at this. I'm going, oh, all right. So I spent 3 years doing one-on-ones with filtered agents. I got exposed, or sorry, the entrepreneurs, and I got exposure to somewhere around like a dozen. But
Right.
I but by joining this company, geez, I'm already available to like 100 entrepreneurs, or potentially 100 entrepreneurs. They can call me, contact me. I love to share my experiences with them. See how I can help them with their business for all intents and purposes. So,
Yeah.
I'm getting a lot out of this as well, and I'm quite enjoying it.
And you have my contact information if you find out another amazing opportunity. Just give me a ring.
Okay, sure.
I just, again, I kind of already said it, but thank you for the work you've all put into this and this opportunity you've created for us, and for being gracious with your time and doing this today. I really appreciate it. And I'm looking forward to meeting you in person and seeing where this company goes.
Great. Well, thank you for setting up the podcast. And
No
again,
problem. Okay. We'll do this
to
again for sure.
yeah, and just remember, we're here to support you. We want
All
we
right.
want you to be as successful as possible.
I appreciate you, Michael.
Okay. Have a good day.